if I have 10 deals, what are my first 5 steps to say, okay, this deal is not good?
So the best thing you need to look at is, generally speaking, if you want to be hyper-focused and get result, you need to know what you're looking for. So your buying criteria needs to be, first of all, the vintage. So what I'm saying is that you need to know your criteria, and that really makes you focus on the right opportunities for the first place. You're not scattered trying to underwrite and waste your time looking. Although when you practice is good, when you're practicing, you want to practice is good to underwrite many different stuff. But when you're actually looking for deals, you should be past that point. You should really be looking at things that makes the most sense to you. So look, the key is if you want to look in Dallas area. First of all, you need to understand that over there, things are going for like 90, 80, 100, 120, even more a door. So 10 units alone will be $1 million. And the market is very competitive. So you really need to try and leverage other people who are already creating deal flow. What about the unit mix? Would you buy any 1-bedroom studios, or would you prefer a majority of 2-bedroom, or what are you actually interested in?
That also will go with the population living in that area, right?
Yes. The actual location. So Dallas, you can network with those people. And other locations, I do not necessarily recommend you to go and start to generate leads at this point if you don't have time to in other market like Waco or like other parts of Texas, because there's already teams in the mastermind that do that. You see, but if you want to do that and you got a conversation and you enjoy working with the team and you think that could be synergies for you helping them, then you can ask them, hey, how can I help you to make direct to seller? And if you think that you want to do that, then it's something that you need to focus on and build infrastructure and practice, you see. But what we see is most people, they're actually deciding, hey, I want to start focusing now on underwriting. So that's what I'm going to be focused for the next 3 months, 4 months, 6 months, even. I'm going to really work on my underwriting. I'm going to work with the team. I'm going to just practice so I can be a really value add focused on being a good underwriting for a team, in opposed to trying to run a direct seller campaign. You can do that as well, but it's really depending on your time. If you're working 9 to 5 and you're W2 and you don't have a lot of time, so you don't have to pressurize yourself too much to try and also become very good at underwrite a lot of deal. And also trying to build infrastructure for direct to seller or deal flow. It's just stretching yourself too thin. That's why we are so strong on believing to find a good team, to slot into. But the other thing is, what else you think you can add value to a team? Do you think that you can be good with money raising, and do you have access to some capital from friends and family like that? What do you think?
Actually, I have to build that system. There are a couple of people that I know, but how do I engage all of them and then bring them to the platform? And then that is all a big thing for me. To me, I mean, I need real guidance in that case. I mean, that's where I'm stuck with that also.
Yes. So attracting money, I want you to go and relook at lesson 2 again. First, look, attracting money and raising capital, first you need to know what you're talking about. The whole point with this is that Marco comes across so professional and so clean, talking in a way that he is clearly know what he's talking about. He's able to answer every question they have, any objection, any kind of blockage that potentially could arise. And he's doing a great job about it. So you first need to understand your underwriting and maybe get the education even more so you feel confident. And then you really need to do like Don. You know how Don from the MIH, what he did as well, what we talked about, how he didn't have Facebook, and suddenly you have to do online posting. That's how people start seeing that Harita is involved and Harita is doing something in multifamily, and they'll reach out to you. Because that's how you build the credibility. Building a website and all of that, or one page, it's all fine. But in the end of the day, it comes down to you to really, first of all, people will know that you're part of the mastermind and all of that. You need, I don't know if you feel that you're a little bit introvert, or you're a little bit, you don't want to show off too much, or don't want to brag, or don't have the confidence of underwriting and more in being involved with other people within MIH that make deals and and helping them out, you really gain the confidence to start pushing yourself online a little bit more, because that's the way. You're saying you need help with underwriting, you need help with attracting money, and you have few people that potentially have some capital, but you don't know how to approach them.
No, it's nothing like that. I speak to everyone.
But culturally, like the people that you want to approach, they're also Indian. There's the same mindset, which I understand as well, because it's kind of something that I understand. So I think that talking to people like that, how do you approach the community? Just ask the question, hey, I got only 4 questions I want to ask you, and jump on Zoom or even call them. Hey, I'm looking to attract money. I have, and tell them who are the people. If this is my just a work colleague, my uncle, my cousin, my grandfather, whatever. Tell them who they are, and tell them, how do you suggest to me to start getting them interested in multifamily? I just want to have your input. I got Hadar and Mark Wazim. I just want to do your input and just see what few different people tell you, and write it down and make your own best version of it. You know?
Okay.
Because you really need to get ideas, and once you get ideas from people, you're actually going to be in a position that you can put all the pieces together and put a plan. And really, you see, when I started with real estate in general, and my language is Hebrew, and I didn't know a lot of the things, it was very helpful for me that other people told me how to say, like how to approach, what to say. So, and I totally understand you, Arita, but the only way to know that, and it's not only Indian or Chinese or Korean or whatever, or Israeli, it's not all people like that who need to know how to say. Also, Americans need to know how to say, but the only way to know how to say is to listen to what other people are saying, like Marco, like other fellow investors that are attracting money and want to do, and ask them. The only way. So that's why I want to encourage you. Talk to Abhishek, talk to Bakshar, talk to Jaydeep.
Yeah. I spoke to all of them, actually. I spoke already.
Talk to Jude. Talk to some other members like Amanda and Javier. They're very good at attracting money. Talk to other people who are in this space.
So if at all I want to start attracting money, like how do you do? I mean, I start with a Zoom and tell them about multifamily. But then how do you save those contacts? Do you just put it in an Excel and save it, or do you use?
Yes, you can put it in Excel and save it on Google Doc, which is good, or you can put it in a free CRM like Insightly.
Okay.
Insightly.
Okay.
You can put it there. But the Google Doc is good enough, really. But Unsightly is good if you like to have a CRM, then it's good. But you can put the picture and all of that. But Google Doc is good enough. But the point is, you don't want to only talk to them and then try and what you really need to really need to create for yourself a position that they see that you're active, a thought leadership. You're not only commenting on posts, great work. You're also doing your own post. And I think that. The importance of that is that when you go to talk to them, if they're on Facebook, they will already see that you are involved in multifamily. It's not going to be cold turkey, you see.
Yeah.
So once and some of them will approach you, and the point I'm getting to is, like Marco said, you need to invite them. If they're coming from you, you need to invite them to one of the Sharpline equity. A lot of the deal at Sharpline, they're already funded. And don't worry about Marco taking your investor. That's not going to happen. That's not how we operate in the MIH family. The point is that you invite them just to learn and see what are you interested in, and a good cash flow, passive income, long-term generational wealth investment opportunity. You just invite them to learn and see what you're doing. And that's all. That's a good starting point. Dr. Gupta, you'll be there. Some other people will be there. They could relate to other people. Maybe Dr. Gupta, other Indian people, so they'll see. They just see what's going on, and that's the key for that. You invite. You don't have to do your own thing. You invite them, and or for example, if there is a meetup in Dallas that Jordan De Silva is doing a meetup or something, and you're going, you go first on yourself. See that it's good. I'm sure it will be good if Jordan is doing it. But I'm just saying, you invite them to join as well. Invite them with no commitment. You're not wanting your money. You just want them to come and learn. That's what I recommend to do.
It's the material is really good, but still there is a difference between reading and then doing the stuff, right? That's where I am unable to do my stuff.
You need to join an underwriting pod. You need to underwrite at least one deal a week. But if you can properly underwrite even one deal a week, you'll be improving within 1 month. You'll be better. You know, if you can underwrite more than one deal a week, if you can underwrite 2 deals a week, you'll even be better than that. And if you need feedback on that, then you need to sit with somebody to give you some feedback. But the point is to learn the thought process, to learn how they manipulate the sheet to create a certain result, to learn how they look at it to mitigate risk in terms of downside protection, in terms of maybe a break-even percent. They're talking about things that you can take in and learn to and implement. Manipulating the spreadsheet is one thing. That's a technical stuff that you can learn. So what I'm saying is that you need to take in the information, but when you do your own underwriting, you need to go through your criteria. Look, it's not rocket science. The point with underwriting is that you gather the assumptions. So you gather all the information, you gather the unit mix, you gather the square footage that is currently paid and how much the market research shows you that you can get per unit, you know, per dollar or cents per square foot. You gather the information if the apartment has a washer and dryer or not. And then you know if you can get a premium for that or not. And obviously you gather all the information about the other incomes if they are, if there is bill back for water or not. You gather all that information and you see what's currently is there, and then you see where you can take the property to with your business plan, and then you do the projection. And once you do the projection, that's called your assumptions, everything that you assume that you can do. And you see how it will look year 1, year 2, year 3, year 5. And that will allow you conservatively also to stress test in between to see what would be the break-even point if you have vacancy. You don't want your assumptions to be, although you see them, maybe you can see some evidence in the market, you don't want your assumption to be overly optimistic or not realistic. You want to be conservative. You want to make sure you stress test, especially in today's market with break-even points, with higher interest rate. If you're going on a short-term repositioning time frame, you want to make sure that you can maybe refinance. How much money you want to refinance? Do you want to refinance 70% of your capital out once it's stabilized? How would that look? So if you start putting all those criteria, then you really know if the deal fits your criteria or not. It's not rocket science, but the key is to have your criteria at front. If you have the criteria in front, you know what you're expecting, and you know where you need to be, and that's the key. Because if you don't have the criteria, you go around in circles. Some people who underwrite and they're okay with having a very low returns, because their investors want to buy A-class properties. They're okay to get 4 or 5% of their money until today, and they're really okay with that. You know, I'm not interested in that. I got certain criteria, but some people are okay with that. Nowadays, when the interest rates have gone up to 5% or more, the only way to make them work is really to bring more capital. So a lot of people bring 40% down or 45% or even 50% down. So that allows them to get maybe a lower return on the capital because there's more money still, but they're actually getting some cash flow because they have less debt. And they're able to get from the lender, they're able to get reasonable terms like a longer IO. People can get 5 to 6 to 7 years IO with certain lenders now. We want to get minimum of 3 years typically now, just to offset the high interest rate. But that the lower loan to value or loan to cost allows them to get better terms from the lender. So those are things that you need to know and need to keep educating yourself by listening to podcasts about multifamily financing. Like I always recommend the Old Capital podcast and obviously the Jake and Gino podcast. But the Old Capital is very good for financing to stay in current. And that's Dallas based. I always you talk to Jordan De Silva. Jordan and I had a discussion about it. How the heck people in Dallas Fort Worth are buying property for 3 to 4 cap. You know, we had a discussion about it, and I told him, Jordan, I think that I know, but I want you to go and ask a mortgage broker in the area. because the mortgage broker in Dallas will be able to see how it's been underwritten. And he went and he found out that they bring more capital into the deal, you know. And I talked to other members in Jake and Gino that also have investors from Silicon Valley and other places. They got a lot of money and they just want to buy a good, stable asset, A-class asset. They don't mind getting 4% return, because they know it's a solid and it's a long term. They put it there and forget about it for 10 years. So it's all investor mindset. But you need to know all of those things. So when you talk to your potential investor, you can explain to them, and you have the confidence when you underwrite to stick to your criteria and really have clarity of what you're looking at. Like you're saying, all the education, it's a lot of theoretical stuff. The due diligence, the underwriting, yeah, it's theoretical. But in the end of the day, the only practical part of not the only, but the practical part is the asset management, the project management, and with due diligence, when you go and walk the properties and all that, that's actually a practical part. All the other stuff, the due diligence, the online, the financial, the legal, these are all theoretical. These are all back-end investigations on the computer and phone calls and mystery shopper. So you need to realize that, you know, it's all part of the process.
Okay. So you are telling me just concentrate on underwriting and don't do anything else.
No, yes, but I'm telling you two things. Underwriting, and when you underwrite deals with other people, you take a screenshot and you utilize this moment that you've done something multifamily to post it on Facebook. And you tag the MIH member, you tag Marco, you tag me, and that if Jordan De Silva is going to look on some units in Texas, whether you invest with him or not, you ask him to help him to underwrite. And if you need help with that, then you can jump with Jason or Hoon and just see that they can help you just to get your wheels more in motion, give you a push. When you're riding a bike, when you're a kid, your parent give you a push to start you, the momentum. So you need that push with underwriting. And when Jordan is going to look on a deal, you can come as well, just to stand outside with Jordan, take a picture. No matter if you're not a partner in the deal. Take a picture, hey, walking through these 20 units, 30 units, looking forward to this long-term generational wealth investment, doing due diligence, you know? You know, so at least you got picture outside property or whatever, or even next to your houses. If you got some houses, you go and take a few pictures, different houses, different color roof, different color, and say, hey, this is house with great cash flow, or looking forward to if you're looking to sell those houses. Not sure if you do, but what would you do? Sell the house and buy more multifamily for long-term generational wealth. In one deal, you can buy 20 those, in opposed to looking for multiple houses. Each transaction takes a long time. You buy only one house. Make a post like that. People will start thinking, in one transaction, she can buy 20 doors, in opposed to one house, buying one house, you know? So if you think like that, you already own the property. You can take the picture. You can manufacture the content. If you think like that, you will start making progress and making traction with attracting money as well as underwriting, because you have to combine the two.
Okay. Good ideas, Hadar, actually.
Yes.